I want to talk about the advantages of contrarian investing. The very word contrarian, I personally believe is somehow controversial in the sense that when it comes to you being a contrarian investor, it means your market decision to buy or to sell must always go against what the other market participants are doing. You must act, in an opposite direction to what other participants are doing in the market. If others are selling, you should be buying. And if others are buying, it's expected that you should be selling your shares at that time. That is why you are called a contrarian investor. Your opinion must go contrary to what is obtainable, you know, amongst the other participants in the market. So I'm considering 10 advantages of contrarian investing strategy. So what are the benefits? What are the advantages of being a contrarian investor? Number one, opportunity for high returns. By investing in assets that are out of favor or undervalued, contrarian investors can potentially realize gains, significant gains when the market corrects and recognizes the true value of this investment. When others are selling, believing that the market or the stock is not doing very well, you are buying, with a strong belief that the said stock will do well in the future. And if you are right, actually, in the future, the market will correct itself, and then the stock will then achieve the level of valuation that it ought to be valued at. So there's always that particular opportunity for a higher returns. Number two, less competition. Since contrarian investing, strategies involve investing in an area that is currently overlooked or disliked by the general, market participants, is often less competitive compared to other, you know, other class of stocks. In other words, you're not competing with a vast majority of investors in the market. So this can lead to better entry price and less market impact when buying or selling. For the fact that people are selling, that means the price is going to come down. So you end up buying these stocks very cheap. All right. And then eventually you will sell at a higher price and make an outsized gain as a result. So there's no competition at all because you're almost like a lone ranger. You're operating as a lone ranger. You don't really follow the heart. You don't follow the crowd. You are just doing your things on your own, based on your own personal conviction. That, of course, that should differ from the belief, the conviction, other investors in the market, are holding on to. Number three, value identification. Contrarian investors often focus on fundamentals, of the company, of an asset, rather than market sentiments. The entire market could be running on sentiments, on emotions of greed and fear. But as a contrarian investor, you invest based on logic. You invest based on reason, and of course, your decision making is rational. That is quite contrary to what's obtainable uh, in the market. This can lead to discovering undervalued opportunities that others may have ignored or dismissed because they are acting based on sentiment. They're not acting based on concrete logic. Number four, long-term growth potential. By investing in undervalued stocks or undervalued assets, based on strong fundamentals, contrarian investors can benefit from long-term growth as the market eventually recognizes the true value of these investments. Just buy, forget about what other participants are doing in the market. Just research the stock And if you feel and you believe the stock is doing, the fundamentals are sound and attractive, forget about market sentiment. Even if others are selling, they stop. Just buy. Okay, as when you buy, eventually the market is efficient, in the long run. When the market becomes efficient, as is expected, you are going to really make money from your investment. Always act, contrary to the crowd. Number 5, risk diversification. As I used to keep on hammering and emphasizing, diversification is very, very important because it helps you to mitigate risk, to spread your risk, across sectors and across industry and across even geographies as the case may be. And so contrarian investing can provide diversification by exploring sectors or assets that do not correlate with mainstream market movements. This can help to spread your risk, across different investment. Usually, sometimes, different classes of investments don't move, along the same line. When a particular, asset class is going down, another asset class could be going up. So as a contrarian investor, whenever a particular class is going down and people are just dumping and dumping and dumping that particular stock or asset, that is when you should be buying. And of course, you buy, with diversification in mind. You buy across different sectors, those stocks that are going down, that has a potential, not just going down, that has a potential of springing up in the future. By so doing, you are highly diversified, and of course, you are making a contrarian move that will help you to benefit, in the future. Number 7, building, or number 6 rather, building wealth through patience. When it comes to accumulation of wealth in the market, if you look at examples of, popular rich investors, they spend long years in the market patiently investing and allowing their investment to grow. Someone like Warren Buffett had been investing in the market for way over 50 years. Look at the length of time, 50, 60 years in the market, if not more than that. Okay. And so this strategy requires patience. An investment may take time to appreciate. It may not really appreciate overnight. What you need to have is the patience that will help you to be able to wait until these assets or stocks appreciate to the level you want them to appreciate. So investors are willing to wait for market sentiments to shift, so that they can build substantial wealth over time. When the market sentiment tends to be down, you do what? You buy and you hold. That's a contrarian move. And when the market sentiment, is kind of euphoric and prices are going up, you can do what? You can sell. It's equal another contrarian move. You can sell, and then when the market, when people are buying, you can now sell and then make substantial gain as a result. Number 8, reduction of overvaluation risk. Reduction of overvaluation risk. By avoiding popular or overhyped assets, contrarian investors can reduce their risk, of investing in them and overvalue securities that may be vulnerable to price correction in the future. Usually, when a stock is overhyped for one reason or the other, like a meme stock, people are just like buying and buying. The entire stock is overhyped. As a contrarian investor, you take your time and study the market, the stock very, very well. Is it overvalued? If it's overvalued, you don't buy. All right. And so you look at stocks that are depressed. Maybe the market are just like selling off the stock and the market and that particular stock is depressed, kind of. You look at the stock fundamentally. Is it really sound fundamentally? Are the fundamentals okay? Is the balance sheet strong? Is the cash flow? Is the debt level low? And if the answer is positive, just ignore the market and buy that particular stock. By so doing, you avoid overvaluation risk. Please don't forget to subscribe to this channel. It will do me a ton of good. Number 9, enhance analytical skills. Usually in investing and in all areas of human commercial enterprise, you need skills, you need knowledge, you need experience. And so contrarian approach involves thorough research and analysis to identify undervalued assets. You must possess the skills to analyze these companies critically to be able to identify cases of undervaluation that the overall market may tend to neglect. And so once you're able to identify that, those inefficiencies, those undervaluation, then of course you know how to go about deploying your capital based on knowledge, based on logic, not based on emotion. This can enhance an investor's analytical skills and investment decision making process. Once you are investing based on knowledge, you discover that you have a sound decision, and of course, the level of your decision making will be sound, will be excellent because of the level of knowledge that is backing up the decision you are making as a contrarian investor. Number 10, potentials for high reward. Investing against the crowd can sometimes lead to substantial reward when the market corrects and aligns with your contrarian perspective or view. It might be a chilling kind of experience when you are going against the crowd, because I must emphasize this. Please take note. Most of the times, the crowd is always right. You know, most of the times, the crowd is right, is always right. So you don't just, you know, invest. You adopt this strategy for just adoption's sake. No, make sure that at that particular point in time, the crowd is wrong. So when you believe the crowd is wrong, then you can now go ahead and do what? And take advantage of the wrong perspective the crowd is adopting in the market. It will go a long way in giving you the kind of returns that would sustain you all through, that would make you a successful investor at the end of the day.